I just wanna call you mine, repeat these types of days. I want you residing on top of my island, I need you to stay. I just wanna feel your breeze, your sunlight on my shade. Oh, I'm so excited, I don't wanna hide it, I know what to say. I wanna be on for the day, no matter the offer they make. We need to get lost in a cave, yeah, all for it, I wanna be on for the day. I wanna be on for the day, no matter the offer they make. We need to be lost in the days, yeah, all for it, I'm telling you that.
You guys, I just want to make a quick video for you tonight. I had a Discord call and spoke with a few guys in the community. Lethund, I don't even know if I'm saying your name right, and Betsky, and you know, the usuals. And one of the questions or topics that kind of came up was just trying to find a mechanical way to approach the market. And it's kind of tough because, you know, the way that we trade, there's a lot of variabilities. There's a lot of ways to enter the market, and you know, because of that, there's always a bit of discretion in how we trade, right? The timing, right, of the markets, you're always going to be trading different sessions depending on what you can do, because there are setups in most sessions. You know, one of the things that we kind of talk about a lot is essentially the four different kind of pillars of the technical aspect of how we trade, right? So you have market direction, POI selection, your entries, and then your trade management, right? And then, you know, there's other pieces to it like psychology and whatever, but in terms of the technical aspect, those are the four main ones. And I've talked about it in other videos before, so, you know, go back and check. But essentially what you want to do is you want to break down those larger concepts into all the individual ones that essentially help you define those main categories. So when you're looking at market direction, you know, which of the concepts that we teach are going to help you define that main concept, right? When it comes down to it, using the higher time frame analysis, you know, like the daily, the 4 hour, and then determining market direction via those, right, which is typically what I do, is I'm looking at the 4 hour primarily for intraday plays, and I'm trying to figure out what the structure is telling me, right? I'm trying to tell me what the order flow is telling me, who's in control, you know, expectational order flow, do I have internal range liquidity to work with, all that stuff. That is primarily done on the 4 hour for me, and there's not too much wiggle room, right? There's not too much left for interpretation, right? You have structure highs and lows, you have higher highs, higher lows, lower highs. All of those things are static, right? Those don't shift very much. So in terms of market direction, and then of course higher time frame POI selection, for me, those are things that have less varying qualities as time goes on. Like, those are always static. These are things that are tried and true. They don't shift very often. Sometimes the market needs adapting and you might have to shift here and there, but it's very slight. And when it comes to mechanical trading, those primary things, the higher time frame, market direction, and POI selection, those should pretty much always be the same, right? They shouldn't vary too much. In terms of market direction, right? You're essentially just following the expectational order flow. You're looking at structure, what highs are going, what lows are holding. You're incorporating supply and demand into that, determining those potential POIs that you want to trade from via supply and demand interactions or flips, right? The extremes, of course. And again, those things don't want to shift. But when it comes down to the entry, right? The entry is something that does vary, right? In terms of leveling or different variances of aggressiveness, right? So you're going to have something that has less confirmation, and then you're going to kind of scale the spectrum in terms of, you know, having more confirmation as you kind of trickle down the scale. A lot of times those earlier entry models, the aggressive ones, they don't really fit a lot of people's risk palette, and they don't necessarily want to trade those. right? And you might have one that works really well this quarter, but next quarter it doesn't present itself as often as it did last quarter, right? So you need to be able to adapt, you need to shift, right? And then you also have the lower time frame details that are going to be a lot more intricate. They're going to involve a lot more critical analysis and just pattern recognition and adaptability, right? You're going to have varying levels of liquidity sweeps, and they're going to look different. You're going to have inside bars, ranges, internal and external range liquidity on mid time frames that you might want to play with for intraday levels, right? There's a lot of varying pieces of it that you need to kind of have a somewhat deep arsenal of understanding of how these things work, so that way when they do present themselves in different aspects, you can say like, okay, this one I feel confident with, this one I feel sort of confident with, I need to work on it a little bit more, or this one, I'm not really good at spotting this in a live market, so I'm just going to ignore it completely, right? So of the like 4 or 5 varying variations of our entry model, they're all the same thing, they're all the same concept, they just have varying levels of confirmation, right? You need to essentially take the main pillars of determining market direction, and then POI selection in terms of the higher time frame stuff, and make sure that is static, that is sound, that is it's not changing, it's unmoving, right? These are things that need to be your tried and true. These are the things that you need to essentially base all of your analysis off of, so that way you can approach the market with those things. You don't have to worry about shifting the finer details of the lower time frame and all that kind of stuff. You want to just make sure that those things are like set in stone, right? Those are the things that you can be really mechanical about, right? Determining what direction you want to trade in from what POI off a 4 hour should be relatively easy for you to spot, right? That you should strive to achieve that kind of level of mastery, where market direction and POI selection in terms of the 4 hour daily are like almost always spot on, right? Obviously to an extent. It's everything else that you need to kind of try to figure out how you can get as mechanical as possible, but understand that things change and that you need to adapt to the market when market conditions changes, right? Because you don't always get the same entry model for the entire year. Sometimes it's really, really good. You might say, entry model B or whatever is presenting itself over and over and over again, but you haven't seen C in a while, or you haven't seen A in a while, right? And all of a sudden the market shifts. Maybe there's some like large economic catalyst that like introduces a lot more liquidity and volume into the market, and all of a sudden B is no longer really presenting itself, but you're seeing A a lot, right? A lot more aggressive entries. Do you trade that? Is that part of your plan, or is that something that you're trying to figure out, right? So what you should essentially do is you should be able to say, if we look at the chart, and I'll just go to the 4 hour, and we'll just kind of look at this quickly, right? Understanding expectational order flow, right? Supply and demand, flip zones, right? These are the kind of things that are going to tell you what direction to trade in and from where, right? So let's say, for instance, we have this, right? We know that our high has now gone, right? So in theory, we are bullish, right? Our expectational order flow is for a pullback and then for a continued higher high. So when we're looking to get into anything down here, at the moment, doesn't matter where, we're expecting this high to go, right? That's what we're basing all of our trade ideas on. What is pro trend? Well, the last high went, so we should expect the next high to go. That's the whole idea of expectational order flow. It just gives us this kind of easy mindset to, look at this with, like a clear-cut concept that says, higher highs are expected, right? The lower lows or the higher lows should be protected. They should hold, right? That's the expectation for order flow, right? So now that we have like a very simple way to see, what direction we're trading in, we have to figure out where we're going to trade from, right? So when we look at our higher lows, right, we're going to look at the swing low, right? We're going to try to figure out where it's coming from. So in this, like this is maybe not the most clear thing, but this is basically what it's coming off of, this entire weekly range or whatever this is. right? So, okay, great. So we swept a bit of liquidity in here, right? So now we have liquidity playing into a demand zone, and then we shift, right? Shift to the upside right here, right? So now we kind of have this more or less substructure break to the upside. We have supply, right? And I've gone over this in the video last week a little bit more in depth, right? But essentially what we have here is we have all of this reaction to the supply zone, right? And then we look at this, we can see everything's kind of efficient in this PA. The only thing that we have left right here is basically this, right? So when it comes down to determining where we're trading to this high and where we're trading from this high or low part of this flip, right? These are the things that remain true no matter what. These are the things that we can trade mechanically, right? These are the things that we have to understand and assess every single day on the 4 hour, where we're trading from and where we're trading to, right? And all of our zones are going to be essentially the extremes. So we could mark this as well, or the flip, right? We get to say, okay, did we take any liquidity? Yes. Perfect. Cool. Here, right? We traded up and we traded back down. We built a nice set of liquidities here as well, right? And there's no problem if you wanted to say, I'm going to look at this level and to see if something sets up. And it looks like something probably did set up, and you would have either taken a loss or taken a break even, right? But when you look from the left, from the high or low, you need to determine which levels have the highest probability for the trade to potentially trade off of to give us that higher price, right? So great, awesome. Here, this is our confirmation where the high actually goes. So then again, what are we doing? If this high goes here, now our expectational order flow again is for price to produce a potential higher low, but ultimately trade above the higher high and give us a new one, right? So then we have to figure out, okay, where are we going to trade from? Well, there's liquidity right here, right? And if we look, we have part of this, we have our demand chain, right? So we have that right there as liquidity, right? You can see there's a common theme, right? There's liquidity before the POI. Here, taps in, price trades higher, builds liquidity again before the POI, trades higher, right? We have an idea that price wants to trade higher, but this is our high that we need to go. So just because we trade below right here, like if we trade up one, right? We trade here, breaks the high, and then we trade down here, it reacts to this, and then it trades lower. That doesn't mean it's bearish all of a sudden, right? What we get is and if you want to be safe, you essentially hedge it. You take the short here, you take the long here, and you figure if you're not really sure where price is headed quite yet, you know, that's what you can do. You can hedge the position, right? But ultimately we take the high. So from here, right, if we were catching shorts in here, totally fine. Best time to take counter trend trades is after we take out a high in bullish order flow. We can look for shorts once the high actually goes, right? Because a lot of times what you're going to see is a lot of people are going to try to take this here, right? Or something like this, whatever. You get the idea, right? Let's say this didn't tap, right? People would be like, oh, this is supply. And then something in the lower time frame might set up here. You would take this, right? A lot of people take this, but no, we want to wait for the high to fail and then we want to get short after proper confirmation. It's kind of like the same thing here. You know, we basically have this supply chain here that's unmitigated, right? This mitigates this, that there produces a lower low. That's equal highs, right? You take this, it's not a bad trade, right? It works out in this case. You'd probably get something significant. You wouldn't get a lower low, but you might get something nice on the intraday and take this low here, right? So you just have to figure out what fits your plan. For me personally, I don't take any counter trend trades unless I know where the order flow is going. And in this case, if it's bullish, I wait for the high to fail and then I take it. This I wouldn't have taken because it doesn't fit the plan. I need this high to go first. Here, right, it goes, but then we don't get that pullback, right? So if it sets up, I take it, I take a loss, I break even, whatever, fit my plan. But if it continues higher, I don't get anything, right? It is what it is. The best possible scenario for me is to use this area here to get into the trade, right? Because at this point, I know I'm bullish, right? This is the indication here that we need to trade from demand, right? So again, market direction, POI selection needs to be the most mechanical piece of all your trading. Master all those concepts, understand that stuff, and then when you get into the entries, what you want to do is, like, if you have, you have your entry model A, B, C, whatever, right? You then want to go back and you want to test all this stuff individually, right? So you'll have your market direction, POI selection from the 4-hour stuff down, right? It's in stone. What you'll then do is you will then go into all of these POIs here, right? Where you see price reacting, right? And then so forth, right? There's supply here, there's a reaction to demand. You want to check all these things. You want to say, how many times do I see this entry model? How many times do I see this entry model? What about this one, right? And you want to collect various data on all of these, right? And you want to just see which one has the highest probability for you. Like, which one can you spot the best? Which one has the easiest pattern to recognize that you can execute in a live market, right? Which one can you apply the most mechanically? Master that one, collect as much data as you need to feel confident on it, and then go to the next one, right? And if something is really foreign and it doesn't make sense to you, you're not seeing it a lot, just leave it alone. Don't try to force it, because in the live market, if you can't make sense of it while you're back testing or when you're doing your end of days, it's just not going to present itself in the live market, or you might feel hesitant to hit it if it does, or you might force it, like you might make it seem like it's there, but it's not in reality, right? So then, right, that's going to be the way that you're going to take the entry model and try to apply it in a mechanical sense. But you need to collect all this data individually. You need to collect it one by one and see what makes the most sense. Is it in your trading hours? Is it something that you can apply mechanically? Does it have the right confluences for you? Does it make you feel comfortable trading it, right? And then once you get all that data, you want to then start applying it to your demo account or to your live account until you can actually execute it with patience, right? Because that's the next step. Back testing, simulation testing, all these things, none of it will produce like the emotional or the psychological benefits of trading a demo or a live market, because you have to simply wait for price to set up, right? So when you're trading demo and back testing, that kind of stuff, it's good for developing the pattern recognition, but when it comes down to the patience stuff, it's not going to really help you very much. So you got to make sure that when you do it, it's for a limited time, right? Just until you get enough data, and then, just to make sure that's even, it makes sense to you. And then from there, you got to go into the trade management. So you need to, and you can do it simultaneously essentially, but you want to look at these and say, okay, A set up 3 times. If I managed it this way, I would have broken even. If I managed it that way, I would have taken some early partials, and then, I would have broken even again. Or if I managed it this way, I would have rode full volume to the highs, and it would have, been a big trade. Get as much data on that as you can and try to understand, which one makes sense over like a long period of time, right? Multiple data sets, and then figure out what trade management style you like. And then again, make that as mechanical as you possibly can. Just stick to one, right? Understand that your data says, okay, 3 out of 4 times, if I manage it this way, it leads to a winning trade. That one time I break even, no problem, right? Or if I manage it this way, I'm breaking even like 10 times before I actually take a winning trade. I probably shouldn't manage it this way anymore, right? So market direction on the higher time frame, POI selection on the higher time frame, right? Entry models are obviously lower time frame things. You need to play with what you like and what makes sense to you. Trade management, same thing, right? The only one that's like a little bit more discretionary is going to be the entries, right? You're going to have, again, a deep arsenal. Sometimes you're going to have, your A, B, C, D, whatever, multiple setups, and 2 will present itself in a single quarter, and then it'll shift the next quarter to something else. You just need to be confident enough to, say like, oh, I've seen this before. Let me go back and get some data on it so I can feel confident to trade it. Anyways, I'm basically rambling at this point. The point of this video is to hopefully give you like an idea of how you can make things mechanical for you, right? Do these things, master them like individually. Don't just watch everything and then try to apply everything at once. It doesn't work like that. You have to figure out all of these different things in their own way, in a way that you can recognize it and apply it to a live market. And then you can start looking at the entries and figuring out, how to get in that kind of stuff. But yeah, I know it was a quick one. Yeah, it's still 20 minutes, but I hope you guys have an awesome weekend. There's a good chance I won't make any video for the next week or the week after just because of the holidays. But I will try to continue to do live calls in the Discord. They are pretty impromptu and they're generally not recorded. So, apologize for anybody who misses those things. But, I like to just chat with the people who are present. So, during the day, during New York, it's generally when it happens. There's no set schedule or anything like that. But, it's always good chatting with you guys. Bit of admin stuff, I guess. We are looking to roll out our early access invites to Swift Journal in the new year. We were hoping for January 1st. We're still on track for that. I think if there's any updates, we'll obviously keep you guys posted. But again, we're not going to just open the floodgates to everybody right away. We do need to kind of collect a bit of data and just make sure that everything is smooth. And yeah, so hopefully Jan 1st, we'll let you guys know. And yeah, that's pretty much it. I don't think I have anything else. But yeah. All right. Have a good weekend and rest of your week. Don't try to push the trading too much. I mean, this December hasn't been terrible in terms of PA, to be honest. But we are potentially gonna start approaching some low volume in the next coming weeks, just leading up to Christmas. We got a little bit of time. But all right, guys, I will catch you guys later.